What's going on, everyone? Lullet here. Today we got the fight between USD versus USDC, aka it's going to be fiat versus crypto. What we're going to answer is, where are you going to get the highest interest rate on your stablecoins? And how we're going to do this is compare interest rates from savings accounts on the fiat side, aka USD, and then look over platforms where they offer interest on stablecoins for stablecoins such as USDC, GUSD, and etc. We're going to be comparing a multitude of platforms, so it's going to be a good back-to-back info-packed video. So with that, you know how it is. I'll see you on the other side. If you Google the best savings account and enter in the month and the year, for example, best savings account, August 2021, then basically you get something like this, where you can see this is nerdwallet.com. And so just glancing over it without even going over too much detail, you basically see the APY over here. And this middle column basically 0.5%, 0.4%, 0.2%, 0.55, 0.61, etc. And this is NerdWallet. And if you flip over to bankrate.com, for example, with that same kind of search term, it appears in Google search. Basically 0.5%, 0.5%, 0.45%. It's like this. It's pretty garbage. Let's be real. We know inflation is 2 to 3%, so having money in these accounts is essentially like burning money without really realizing it if you don't know the concept of inflation. And so these being the case, these are pretty not optimal whatsoever at all. And so comparing this kind of landscape with just fiat, aka your US dollars, USD, now we're going to take a look at more stablecoin realm of USDC and otherwise. Now, right before we get into the meat of it, just in case there's folks out there that don't exactly know what stablecoins are, or kind of what are the type of stablecoins that exist, here's some information. The first type is fiat collateralized stablecoins, where essentially there's a type of fiat, whether it's a US dollar or another type of currency, that acts as the collateral, as the backing for these stablecoins to exist. Some examples of this are going to be your USDC, in other words, your USD coin. You have GUSD, your Gemini dollar, and some other examples. The second type are crypto collateralized stablecoins, where there's actual cryptocurrency which is acting as that collateral, as the backing for these stablecoins. With crypto being as volatile as it is, it's not uncommon to see even more collateral to act as the reserve basis for these actual stablecoins to be produced. A few examples are going to be your DAI token, your EOSDT, and WBTC, which is wrapped BTC. And instead of the normal Bitcoin blockchain network, it's basically able to exist on the ERC20 network. And finally, you have non-collateralized stablecoins, in other words, algorithmic stablecoins, where there isn't necessarily a reserve behind these stablecoins, but in fact, there's an algorithm that works in such a way to increase or decrease the supply of these tokens in general based on certain factors, whether that's demand or other external factors. A couple examples are going to be your DeFi dollar, as well as Ample Fourth, where its symbol is AMPL, and not to be confused with AMP, which is AMP. And a quick disclaimer before we get into the arena of stablecoins. Essentially, when it comes to USD, aka your fiat, you're going to have insurance like FDIC insurance or SIPC insurance on the security side. The point being that there are certain insurance that exist, for example, up to $250,000 per account that you may have, where basically your funds are protected. But when it comes to the stablecoin arena side, when you're talking about certain platforms, there may not be that same level of insurance. So your funds may not be insured, aka you do have that type of risk. If the platform's hacked or it's gone, you may have some loss of funds or some impact to your whole portfolio in general. So I just want to give this huge disclaimer about where you want to choose to put your money, essentially for the results that you're trying to look for. With that, let's get into our comparison for these platforms for stable coins in terms of cryptocurrency. Looking at Coinbase first, basically you got a yield over here for USDC specifically of 0.15 APY, which in fact is actually less than what we just saw with actual savings accounts, whether it's Marcus or Citi, etc. And so if you have USDC with Coinbase specifically, actually you're not really earning anything, but there are advantages of having stable coins on the platform specifically. But other than those type of advantages, for example, quicker execution with certain trades because you have coin already deposited with them versus funds going in from your checking account, for example, for an ACH transfer into Coinbase, essentially what's happening is USDC is going to allow you to trade or execute trades better and faster. But from an interest earning perspective, it's really not worth it. The focus of this video is to talk about more of the savings rate potential by leaving your funds with a certain platform in the form of stablecoin. But if you look over here where it says earn up to 4% APY, this is more on the lending side. If you're trying to lend your USDC through Coinbase over here, and basically you get a higher rate, as they say, but this higher rate of 4% versus 0.15 naturally comes with its own other realm of rules and regulations and otherwise, so not touching on it here, but basically just want to say there are other options by lending your crypto to get certain APY, but that's a topic for a different day. The rate of 0.15%, it's been there since June 3rd, 2020, which is more than a year from the time of this recording. Whether it's 0.15% or 0.5%, it's basically closer to zero than anything else. And so now we'll be looking at the interest rates for stablecoins where it's more sizable and more meaningful and something that you may want to consider. So here we are at Nexo, and with Nexo, basically you have different tiers depending on how much Nexo you have, and Nexo is a type of token that's specific to the Nexo platform. And essentially it allows you to get more interest essentially as you have more Nexo relative to the size of your portfolio. At the highest level, if you have less than 1% Nexo tokens in your portfolio, so just say you have 0, you're basically still able to get, in terms of stablecoin savings interest rate specifically, you get 8% over here. And what this plus 2% is saying is that if you choose to be paid in Nexo in terms of interest, that 8% is actually going to be 10%. You'll just get all that interest in Nexo. The focus of this video is more of a plug and play model where the assumption is you're not really looking to have more platform tokens just to get higher interest, but we'll go through kind of examples where you'll kind of get that insight. But at the highest level, if you had no loyalty whatsoever to these platforms, that's what we're discussing here today is how much interest would you get just signing up for an account, depositing some USDC, and how does that look? With that being said, basically 8% on the low end, and naturally if you do have that loyalty or membership with them, in this case I'm platinum with Nexo, and so 10% or more is in Nexo tokens in the portfolio in terms of worth or value, and so instead of 8% it'd be 10%, and naturally when you see up to 12%, that's coming from the fact that if you choose to be paid in Nexo, you'll get that plus 2%, and so that 10% goes to 12%. When we come to Celsius, we can see that we have this $9 figure over here, and in terms of APY, it's going to be 888's, 8.88% APY. You can get more interest if you have their token, CEL token it's called, Celsius token, which is CEL. And so if you have more token, you can get more APY, but at the highest level, just plug and play, you get 8.88% off the bat. Next up, we got Voyager. And so Voyager's August rewards. How it works with Voyager is that every month they do change out their interest rates in terms of what you can earn in terms of APY on your cryptocurrency. And when it comes to, for example, Nexo or Celsius or Coinbase, every platform has their own rules, whether they change it monthly or instantaneously at their discretion, etc. So just a heads up to look through their terms and conditions just in case you're considering, wanting to have your USD with these certain platforms. So Voyager's August rewards, as we scroll down and go down to USDC, what we see is 9% off the bat. The only difference is you do need a minimum in terms of earning interest to be capable of it of 100 USDC. Now this threshold may not be 10,000 USDC or otherwise, but the point is there are some minimums on this platform which are important to recognize and take into account depending on what type of crypto you're trying to earn interest on and if you want to deal with Voyager, for example. But at the highest level, 9% ain't too shabby, and it's more than Nexo and Celsius so far. And if we take into account Voyager's token, it's called VGX, this is what it's going to look like. They have a loyalty level program where basically if you have 500 VGX tokens, you'll be an adventurer, 5,000 you'll be an explorer, 20,000 VGX tokens you'll be a navigator, and you'll basically get these type of extra benefits. And if you look carefully at the interest booster of 1.5% extra, if you tack on 1.5% extra to the USDC of 9% already, you're talking about 10.5% in interest. But apart from going through all of these type of benefits, the biggest thing that I just want to give a huge disclaimer about is basically for 20,000 VGX tokens, if you look at the price of VGX itself, it's basically $3.61. So even if you say it's roughly $4, 4 times 20,000 is essentially going to be $80,000 that you need to keep tied up in VGX token specifically with Voyager, and then you get these other perks. So depending on the situation or what you think of Voyager in general, it may be worth it for your situation, but off the bat, just looking at it at the highest level, I don't think that it's really worth it in general for most people. Moving on, we got BlockFi. So as you scroll down, you basically have USDC, and they have 2 tiers in terms of your interest earning capability. So tier 1, up to 50,000 USDC, you're going to get 7.5% USDC, and up above 50,000 USDC, you're going to get 5% in general going forward. And another stablecoin, because of their partnership with Gemini, BlockFi with Gemini, basically is going to be your GUSD. And just to cover it briefly while we have this time, is 0 to 50,000 over here is 7.5%. And it's the same thing replicated, where you go above 50,000 and you get 5%. Bringing up GUSD will lead us on to Gemini. So with Gemini, with GUSD, you're going to get 7.4% APY. Now, the thing is, Gemini and Gemini dollar, basically, Gemini dollar is what they want to push. There's other regulation behind it. For example, a type of insurance, FDIC insurance, where we have that with checking accounts, but we actually get it with Gemini dollar just on the way it's structured. And so if you want to look at safety or other elements, there's GUSD as a capability to consider in terms of stablecoin. But when it comes to USDC and that kind of consideration, with Gemini, because they want to push their kind of GUSD quote-unquote agenda, basically you're not going to be able to have USDC on Gemini's platform. But just wanted to put it out here because Gemini is a pretty hot platform, but there's a reason why USDC isn't available, but it's also something to consider when you're considering USDC versus USDT versus GUSD and other stablecoins accordingly. So the end all be all is your highest interest rate with no bells and whistles attached, no platform tokens, no nothing. Just sign up, and what can you get? Basically looks like Celsius at 8.88%. Voyager gives you 9%, but you have that minimum 100 USDC. When you talk about Nexo, for example, you do have 8%, and you can get more if you want to earn it in Nexo token. When you come to Gemini, you got your GUSD of 7.4%, but no USDC capability. With BlockFi, you do have that capability, but up to 50K, you have some tier 1, tier 2 delineation of 7.5%, and then it goes to 5% after 50K when it comes to both GUSD as well as USDC. So net looks like Celsius is our winner. With that, thanks for coming to the end. Peace.